Hey, good everybody. Still here for the Daily Market Pulse. It's actually Monday, Cinco de Mayo, May 5th, 2014. So we saw stocks indexes gap open lower and then reverse, most of them finishing near session high. So nice reversal. It happened, however, in extremely, and I do say extremely light volume. So it's been a month now we've been in this correction already. So not bad. Some of them have lasted a lot less. So this one's actually extended fairly reasonably. Obviously, there's been a little bit of a rally, but nothing substantial, and not enough to really say to get us out of it. So with that said, Dow Jones. Am I missing today's candle? Yeah, I am. So there's a green candle here. Essentially, gaps lower on the open, comes back up. I'll show you on the. I'm not sure why it's not there at the moment. You can see the big gap lower and the reversal finishing green, right at and near 16,530 is where it is right now. So just below the resistance still in this case. So it's not yet surpassed. Here it is in terms of it looks a lot like that on the Dow. This is the S&P right back to 1885 resistance. Nothing's changed. Looking for a breakout if they can do it. Overbought, slight divergence, negative divergence. So watch out for lower as a possibility still. Nasdaq, on the other hand, attempting at this point to break free of the channel that it's in. Has not yet made a newer high in the last 3 days. So it's for now holding, but it looks reasonable, but still again struggling. TSX. So it actually finally shows and flashes a sell signal. So this has been going completely opposite. The U.S. markets were going down. TSX holding strong. You see it was making new highs even as early as Friday. Today, first time an actual sell signal right below 15,000. In fact, quite a bit below 15,000, but nonetheless. Interesting how that's working out right now on the TSX. Let's go over to the U.S. dollar, Canadian dollar. That's still kind of going sideways between moving averages for the most part and a pivot area. Nothing's really changed. The euro is still climbing, rising up on a trend, moving averages as well. Room still to 139.50. Nothing's changed there. Treasuries, after a big move on Friday, tried to make a new high, but essentially matched Friday's high. Closed down a little bit, kind of expected, but still not bad. A little profit taking for the time. Nothing really horrendous here either. Japanese yen, all the way down to a new low, essentially for multi-week low, and then reverses, finishes near session high, still holding moving averages, still looking for higher. That was Friday. Then here's a little higher high today, and it's still holding and finishing green for the day. Gold and silver both coming off their support areas and bouncing beautifully and aggressively. This was actually that's actually Friday's candle. So I don't still see, for some reason, today's. Oh, there it is. There's a continuation from Friday. Looks good. Room into 1335 on the upside. Silver did something similar but slightly lower in 19. Also bounced and popped, trying to get through 20. And then eventually to 2050 as well. Let me refresh this real quick. There it is. Still no candle. That's happened a lot in silver. Let's go over to crude, because crude, over a course of multiple days, dropped primarily with a slight bounce, would drop further again with a slight bounce. Seemingly, or at least possibly anyway, bullish engulfing today. Possible support here at $99. It's been an area of support resistance in the past. Room to 97 naturally if it breaks down below that. So it popped on the open, went higher into the moving averages, and reversed, finishing down for the day, but still holding 99 for now. Let's go to small caps, IWM, the ETF proxy for the Russell 2000, and you are seeing a gap lower on the open, holding the 200. Still below a flattening 8 moving average and below a 20 moving average as well. So still in the downtrend, as you can see intermediately. So that's still happening. So somewhat neutral to bearish, of course, in this case. And I say neutral because it's been sideways for 5 days, almost 6 now, and then to bearish because of the overall intermediate trend still declining and still struggling. Declining 20, flat 8. The 50 is starting to roll over a little bit. The 200 is kind of on the flat side as well. And then let's jump over to the VIX. The VIX popped aggressively on the open, just like the markets popped lower on the open, and then this actually reversed lower to finish essentially even for the day, flat for the day. Below the moving averages, but right at that 1325, 1350 support area. Nothing really earth shattering going on in fear as of yet, but there's been some signs. Last week, early, we had the upper shadow breaking into 15 plus. And then today, again, with a gap open higher, a little suspicious in terms of what's going on there. Okay, I'll catch up tomorrow.